On today's Rebel's Edge, Trump's tariff tantrum continues as the S&P gives back half of yesterday's short-lived gains. And its hands and feet inside the ride as the VIX roller coaster continues. That's off 16%, up 16% as we're going on the air. And Carmax crashes as they pull back forward-looking guidance. Is this a trend that's going to continue? And will the next couple of quarters be, as some market watchers are suggesting, the lost quarters for guidance thanks to the Trump tariff tantrum? We'll unpack all of that and more on today's Rebel's Edge.
Here we go, Mark. It should be pretty fun today. I looked over there. I was like, hey, that is not John. Unless he's got a beautiful toupee, that is not John.
If you can find one that looks this good, buy it, folks. That's what I'm going to tell you right now. Just go out and buy it.
We have to have a little bit of fun on a day like today. I mean, yesterday we were hoping to follow it up, right, Mark? I mean, we had this unbelievable turn, something we have not seen in forever. And that was an unbelievable move to the upside, only to be followed up with today. And today we've just started to have a little bit of pressure. It started to increase, and it's just been increasing throughout the day, and along with volatility, which we'll get into in just a moment. But it's been a wild ride, right, Mark?
It's been unbelievable. As you point out, we only saw action like that in terms of the net swing in the S&P 3 times. That was the third time since the big one, World War II. My gosh, that gives you a little bit of context of how unusual this type of activity is, how unusual this volatility is. And look, it's kept us busy. Certainly, which has been fun. We've been on every, our usual networks from Newsmax and News Nation and Schwab and New York One and all that. They even had me on CNN, Pete, in the hot seat a couple nights ago. Yeah, defending Trump's tariff policies and helping them understand what's going on in the market. And my friend Richard Quest from Quest Means Business with his British accent said, how do you justify $3 trillion wiped clean from retirement accounts all over the world? And I said, Richard, it's only a loss when you sell. I think it was Warren Buffett that said that. Yep. So we're telling people to stay the course as hard as it might be. But let's jump right into it, Pete. Macro minute, anything to do with tariffs?
You know what? I'm going to go away from tariffs because we've talked enough about tariffs. I'll tell you what, my macro is this. My macro is tomorrow, earnings season truly does begin. And what does it begin with? It begins with the financials. Yes, we had Delta. Yes, we've had Costco. But JP Morgan, Wells Fargo, Morgan Stanley, BlackRock, all of these are coming tomorrow. And it's going to be, if you go back to last quarter, I think the market was saved by what happened with the earnings cycle. And I'm not saying that the earnings this time around is going to be able to do that because it's a much different animal with the tariffs. But I will say this, they certainly could help potentially the markets. And I think that they will. Kicks off with the financials. We'll find out a lot more tomorrow. That's my macro minute.
Well, Pete, I'm going to do something I very rarely do, which is take your counterpoint to that. Okay. I think that there is an even greater risk of this earnings season doing damage and causing further pain, and not because they're going to report first quarter earnings that are disappointing. I don't actually see that. I think most companies, most sectors, even consumer discretionary, actually probably did fairly well in the first quarter. Here's what I'm really worried about is guidance, because as we've said so many times, earnings season and earnings reports for the past 2 years now almost have not been about what happened in the last quarter. It's been about that guidance that the CEOs are offering for what the next quarter, the next 2 quarters, the rest of the year looks like. Lots of people on the street. We were on the floor of the New York Stock Exchange day before yesterday talking to some of the traders down there. What a big concern, the big talk we're hearing right now is if companies start to pull back or completely say, we ain't issuing guidance.
Right.
Nothing. We ain't telling you diddly squat about what we think the future holds because we have no flipping idea. And that, my friend, we know, what do markets hate the most? Uncertainty. That could spell disaster for this earnings season. So I'm really, really concerned about that. Really concerned about that.
We always look at the guidance. That's always been the most important part, and especially if they're not willing to throw out that guidance, that is something that could be very, very dour for the markets for sure.
Yeah.
I guess it all just depends on, we'll see what they start with, and that's as soon as tomorrow. So that we'll find out. All right. Next up, we've got fantastic futures. I'm going to jump right on that volatility. Volatility's been all over the place. Hopefully everybody fully understands it to the degree that we've been talking about. And are we at a level where we should be right now based upon the markets? It probably should be higher. I think that we should, at this point in time, actually fire even through 60, quite frankly. We've seen 60 in the pre-markets. We were just looking, or just when I got on here, we're at about 53 on the VIX right now. So when you look at that and you start looking back just even a week or two and you see April 1st, April 2nd, there we were around 21, 22 on the VIX. Well, we are nowhere near that anymore. And we have been up, up, up. Now, there's violent moves that cause it to pull right back, just like yesterday, right? And we had a 34 low this morning. But as the markets move, volatility is moving as well. And I would tell you this, are we going to be able to move at 4 and 5% every single day? The answer is no. But this spike back up, I think, is going to absolutely hold a little bit longer before we start to see it seep back down.
Well, Pete, that may be unfolding as we speak. The VIX now up 20 handles, 57.40. So we are not that far from 60. Sadly, as the sell-off continues to accelerate, we've now gone from giving back 50% of yesterday's gains to over 60% of yesterday's gains. God damn, that's painful. And, two things I'll mention on that. Number one, you have become the oracle of the VIX. And when you say VIX, the volatility is cheap, as you did when we were in that 15, 16, 17, 19, we started seeing those big trades from 50 Cent and other of our traders come through in the unusual. They anticipated something like this was going to happen. They got the timing pretty darn close to spot on. So, folks, if you're not paying attention to the VIX, if you're not paying attention to what we're telling you, what Pete is telling you when he says, man, vol looks really cheap here, you're missing out. You're not missing out on gains, but you're missing out possibly on the opportunity to protect your portfolio. And the only other thing I'll mention about this, Pete, is people got to pay attention to the dates. The dates. Why did yesterday happen on April 9th? I will tell you why yesterday happened April 9th. And if you were paying attention, folks, that was not a date that was news to you. Those tariffs were announced last Wednesday, but most all of them, 80+% of them, were not due to go into effect until midnight last night. So yesterday was the president's last day to act, to do something, whether it's telling the market to buy, which may go down in history as the most remarkable thing a president has ever said in the context of the stock market. And of course, now the Dems are all screaming insider trading, as if they haven't been doing that themselves for the past 40 years. Dun, dun, dun. But yeah, I mean, just absolutely unbelievable. We knew April 9 was going to be a pivot point, as some of our technical traders said. So something was going to happen yesterday. I didn't have Trump calling a buy on my bingo card, but we knew if we were paying attention to this thing, that yesterday was going to be one of those crucial points. All right, enough about the macro and futures, and we could talk about it all day long. We got some stocks to cover, Pete. What do you got for the first?
We're going to hit Dexcom. So we're talking about medical devices, and this one is innovative as anybody out there, Mark. It's unbelievable what they've been doing and working on the developing of the next generation of diabetes and the device in which they're using, the wearables, the glucose monitor, the FDA clearance, all of that. This is one of those stocks, at least for the majority of the morning anyhow, it was in positive territory. It was in positive territory for the right reasons. This is a company that actually has a PE that's very, very tolerable, I think, in the markets that we've got and in the space where they are with medical devices. It's a 33 PE. They've got great free cash flow. They've got a really strong balance sheet. I think there's a lot of positives that you could pull out of this. And it also helps people as far as, do they got to prick their finger anymore? No, they're able to do all the things that they'd like to do and alleviate some of the things that they didn't like doing. And that's what this is about. It's a great something that's going on. The development of this, I think, is outstanding. Dexcom at least started the day in positive territory, Mark. Can it hold on? Your guess is as good as mine on that.
Yeah, well, can anything hold on? And,
Right.
and the answer is very likely no, given just how much selling pressure appears to be continuing to pile on while we're here live doing the show, which is always fun. But,
Mhm.
I did a little bit of man on the street research, Pete, and I won't name names to protect the innocent or the not so innocent, but I spoke to a couple of users of their products. And what I heard was a couple things. One, that reduction in the timeline that you need for the dosing, it's helpful, but it's not massively helpful. And the other thing I'm being told is they are not the only ones out there that have similar types of technologies either already in the market or in development. So it's going to be interesting to see as their competitors, lots of competitors in the diabetes monitoring and treatment therapeutic space. Of course, this is a very crowded field, as diabetes is one of the afflictions that impacts one of the highest percentages of the American population. But the other thing is, I would be curious to know if this was not a day that ends in Trump, if this stock would be up 10% or even more, as these med device companies on news like this, notwithstanding my counterpoint to it, you might have seen a 20 or 25% gain on the open, and they might have been able to sustain it. So they picked the wrong day
Yeah,
to
yeah.
make this announcement, man, I tell you.
That is 100% right. By the way, Carmax is our next one. And the reason I'm jumping right into it, Mark, is they kind of missed on their earnings to some degree, but by a little bit. It was a soft start for the quarter, but a strong end of the quarter. So there's a lot of different variables that were going on there. This is one of those names that it was getting hit early, long before the market started going down. This thing was already in negative territory. It was down about 20%. Do they have a high short interest? They do. But in this particular case, those shorts, I think, are still wanting to ride this thing down just a little bit further. Stock was down 20% last I looked. I'm sure it's probably more by now. But I will tell you this one, at some point, the shorts are going to say, you know what? We've had enough. We've had a great run. And we're going to start to bring in a little bit of that. I think that would be something to keep an eye on. It did hit 52-week lows today as well. When I look at the expectations, they just didn't meet them, Mark. They did have better than expected in terms of the revenue. That was a pretty good number year over year, up 6.7%. But the stock is getting hammered. And I would say that it's probably getting hammered for mostly the right reasons at this point in time. This is a market that is not going to be very forgiving. And in this case, Carmax didn't give what they really needed to, which they needed to give a much better earnings side of this report than they did, and they just didn't do it.
This is a multi-headed beast, and I will try to be quick with it because we still have a lot to cover. This is a cautionary tale in that forward-looking guidance, because that's why the stock's getting beat up. The numbers were not that terrible. If you break down some of the segments of what CarMax reported, my God, 114% gain in dealer sales. Isn't that something that's pretty darn good? As you pointed out, retail sales up 6.2%, wholesale up 3.1%. But it was, unfortunately, that earnings per share that missed, and it missed relative to the guidance issued last quarter. That, again, as I said, a cautionary tale for any CEO that's about to report in the coming days as we get into Q1 earnings season kicking off in earnest tomorrow. Man, oh man, that is a great example of why these guys are loath to do it. I want to check in with our buddy Jeff Garbaz on the short interest side. I did not have a chance to do that before the show, so maybe we'll put that out on the YouTube or in a comment or something for viewers just to see what that short intensity is in this name. And Pete, I got to ask you one question. Isn't this a company that if these tariffs continue, if we're in situations where we've got like the company that makes Range Rover, Jaguar, and other vehicles from the UK are saying, guess what? This is our response to the Trump tariff situation. We ain't sending you no more cars, okay? Or we wind up in a situation where some of the tariffs remain on imports from Germany and other places. Isn't this going to benefit the used car market like big time? And aren't these guys, them and Carvana, are really the only two major games in town?
Yeah, no, that's a really good point, and I don't disagree with you at all. As a matter of fact, I think that I would be in agreement with you. And by the way, there is a short interest there. It's about 8%, which is a pretty substantial number. And that when it hit the 52-week lows today, I'm not saying that they wanted to buy it at the 52-week lows. Maybe they think it's going to get beat up even further before we get to the point that you were talking about, which is, hey, if they stop bringing stuff over to the United States, the used car market is going to definitely go up, 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 up. So at some point, I would expect to see those shorts wanting to cover something. Maybe they don't do the full cover, but they're going to cover something. And I think that's just inevitable. Next up, we've got Intel. And they've got the new, everybody was so excited. Kramer, the whole world was so excited about, hey, they've got this great new CEO. He's the greatest thing since sliced bread, all the rest of those things. Where's that stock today? Well, it's trading about $20. Now, the range over 52-week, and he's only been there a short period of time, but the range, 17 to 37, let's just call it. And here we are at 20 or less. The CEO is not the catalyst that he was on day one, day two, day three. And that has changed dramatically. Now, he's invested in all kinds of different Chinese tech firms. That's a pretty interesting thing. But the part that I think people are concerned about, I'm one of them, would be, well, what about the military stuff that you're doing with the Chinese? Now, that's a little bit different. And I don't know if people really have fully engaged themselves in this, Mark, but I got to figure that that's something that everybody's going to be saying, hey, wait just a minute. What is Intel doing and how are they doing it? And they're getting involved in the military of China. Well, I don't mind the others, the technology, in the country that they were talking about as far as all these investments. But when it comes to the military side, I think there's a lot of people, not just me, not just you, that are looking at this going, are you kidding me? This guy's doing stuff with the military over there. That's really a questionable thing, in my opinion.
This is one of those, remember the things that make you go, from the 80s or the early 90s? This is a total head scratcher to me. Yeah. Was there no vetting in the HR process to put this man in charge of the largest, folks? So if you don't know this, and most of you probably do, the largest chip maker in the U.S.? What? Are you kidding me? If we were not in the middle of this tariff tantrum, this would be front and center. You would see Trump on Truth Social and on X out there screaming and yelling. The only reason we're not hearing that is because this is just buried among the sea of red that's across all of our screens. And Pete, it's not a passing or a casual investment this guy has. He's got over 600 investments. Not all of those firms are linked to the Chinese military, as far as we know. But of course, given that it's China, there's no way for us to know the truth. This is outrageous. This guy's got to be removed, and the stock should be down and down even more on this completely irresponsible hiring of this. This guy is not fit to be the CEO of U.S. #1 chip maker. He's got to go. And the activists should be screaming even louder than I am.
Right. And I think the president would probably take a little look at this thing, don't you? I mean, I think he's got a lot of other things to look at, though. He's a busy man.
Mr. President, I know that you watch us, especially when we're on CNN or on Newsmax. I don't know if you watch The Rebel's Edge, but if you do, let's help get rid of this guy. He's got to go.
Yep, I hear you. Nvidia, that's our next one. Now, we've talked about these tariffs and we've talked about all this other stuff, Mark, but I think this story, the storyline of Nvidia is pretty interesting. And the fact that it's gotten pounded, it's been in the double digits. It's not right now. It's triple digits. Last I looked, it was 108. I'm sure it's at a different level because all I've got to do is refresh my computer and I see things going down lower and lower and lower. But when I look at it and I see the 52 weeks and it's down at 73 on the low side and 153 on the high side, this is a stock that is certainly getting a lot closer to that low end. Now, it's not really all that close just yet, but we start breaking through there and we get back to that double digit type numbers, Mark. It gets damned interesting to me. They still have a strong near-term demand coming for the Nvidia chips. There's no doubt about that. And they've got their deals with the Chinese that seem like they're actually a little bit more been looked at by people, and it's not just going to the Army. But I'll tell you this, here's the one interesting thing. One of the things that I always like to look at when I'm looking at and breaking down a company, I want to see what does the PE look like? What is the normal PE? Where is it now? And all the rest of it. Well, if the normal PE, if you go back over the last 5 years, the price to earnings has been averaged around 35. Right now it's trading about 25. So I am keeping an eye on Nvidia. I think that there could be some opportunities there. I'm not saying it happens now. I'm not trying to catch a falling knife, but I do think that this is one of those names that you should have on your computer when you're looking, because at some point when we get further into this and a lot deeper onto these tariffs, we will start seeing things start to move around. We'll see what kind of relief there is here and there. But Nvidia is definitely one of those names that you're not going to flush it down the toilet. You better keep your eye on this one, I think. And there could be some great opportunities. I don't think it's there just yet. I think it gets back into the double digits. And if that happens, we'll start looking at that one a little bit closer.
Yeah, I totally agree with you. I do not count this one out by any stretch of the imagination. I think, by the way, Pete, that there are a lot of people on the sidelines, particularly retail, who, by the way, Thursday and Friday of last week, retail inflows into the stock market were like in the top 3 or 4 days, including COVID,
Mhm.
which is really, really interesting because people thinking that stuff is starting to look cheap, stuff is starting to look like it's on sale, even with the declines like we have today relative to the highs, particularly in the Mag 7 and some of the higher flyer names in AI and chip makers, of course. And the other thing I'll point out is President Trump recognizing that some of these things, particularly as it relates to exports from domestic chip makers and technology firms, need to be looked at a little bit more carefully, maybe give an exemption from some of these tariff applications. That's part of why there was just a little bit of relative strength in the name. And the bigger issue, and I hate to use the C word again, but the bigger issue for Nvidia appears to be competition in one of their largest markets and exports, of course, China. So we're going to see how this plays out, but this is definitely on my watch list. It's starting to look tempting.
Cool. Yeah, I agree with you, and watching it very closely. It's probably very near the top of my screen as one of the first things I look at. First thing is the VIX. Second thing is the 10-year. Third thing, probably Nvidia at this point in time. All right. So we're going to jump to a little bit of sports, Mark, and I think it could be kind of fun because I want to get your sensing, because I know you don't watch it as much as I do, college football, NFL football, all these different things. I know golf is one of the things you probably watch, so we'll get to that second. But on this side, we've got the draft, and the draft is finally almost here. April 24th is when it happens. It's Lambeau Field. That's going to be pretty historic, I think. You've got 32 guys that'll go in that first round. It's going to be really exciting for a lot of people. It's life-changing, as we all know, because all of a sudden you get into that NFL, man, you've got some real money coming at you, especially down the road after you get through that rookie contract. This is a big, big day for a lot of these kids. But I wanted to go on to this and talk about some of the sleepers. So my first sleeper is a guy named Jackson Dart. You might have heard of him, so he's not an absolute sleeper, but everybody talks about Shedeur. Everybody talks about Cam Ward. Everybody talks about all these various quarterbacks. This guy, in my opinion, might be the best of them all. He's from Ole Miss. He's a great player. I think he's kind of an exciting one. You've also got a wide receiver from there as well, Trey Harris, who wide receivers are a dime a dozen, Mark, but I will say this. There are some great ones out there. I think this kid is one of those great ones. Now, there's about 6 or 7 names in front of him going into the draft. That's why I would say he's a sleeper. He's a big kid, 6'3", 215 pounds, can run like a deer. He can do all the things that all the other guys do. He's got incredible athleticism. I think for that reason, those 2 players from Ole Miss really stand out. But there's a third from Ole Miss, and that's what makes this thing so creatively interesting to me. Trey Amos, he's a cornerback. He's 6'1", 195 pounds, can run like a deer as well. When you've got 3 guys from the same school, and it's Lane Kiffin's school. He's the head football coach there. He was a ball boy when I played for the Vikings, just to give you a little perspective. Great guy, knows football backwards and forwards as good as anybody on the planet Earth. But I will say this, he is an amazing coach, and the fact that these 3 players are going to have to be sleepers for people to find out about them, I think he's probably a little bit frustrated with that because Ole Miss is being disrespected to some degree. But those 3 guys, all from the same school, I think this could be really, really interesting, Mark. So we'll see how things go with the draft. I think it's pretty exciting. It's always, this time of year is always exciting. So hopefully you like some of these sleeper holes that I'm talking about right now, because these guys, I think, will fit into just about any franchise that grabs them. Mark, it's a Friday, almost. It's Thursday. Oh, it's going to be brutal, man. The day is just, every day is just longer and longer and longer with all this. That's why we enjoy the sports side of it, because it's Masters weekend, man. I mean, that's pretty exciting. And John's going to be down there. He's pretty excited about that. I am not. I'm excited not to be there, quite frankly, to be honest with you. I love just watching it on TV. It's all good. I don't need to be there with all the headaches of trying to get to this place and that place. But I will say this. It is the event of events when it comes to golf, right? I mean, the green jacket and everything else and all the superstars of golf that are going to be there. So I just wanted to run past you. Who do you think is going to win when it comes to the Masters? Is it Scheffler? Is it McIlroy? Is it DeChambeau, or who do you think? Because I know you're far more into this. I'm playing in your warehouse, your wheelhouse right now. What do you think about this one? What do you think about the Masters? Are you thinking about going? You're not going to join John.
No, so listen, so yeah, so Dr. J is, as we speak, 35,000 feet somewhere over God knows where. He's been with me here in the city, just bouncing from TV studio to TV studio, covering the Trump tariff tantrum nonstop. By the way, folks watching, we want to continue to watch that coverage. I'm going to be on New York One on Spectrum cable at 4 p.m. Eastern time with my friend Annika Pergament, and allegedly on CNN again in the hot seat tonight at 10 p.m. But, they're not always sure, Pete. They sometimes cancel on me at the last minute, go, maybe we don't want somebody that's that conservative unless they've got somebody like Quest on the other side. So we'll see. We'll see. We'll put something out on social. But yeah, look, this is one of golf's very sort of storied traditions. The green jacket, as you point out, the Masters. It is a 3-day, not just the tournament itself, but a 3-day excuse for people to fly their private jets and corporate jets down to Augusta. I was told by a friend in that business that they are literally tip to tip in terms of it could not fit another plane on that ramp right now. It's a favorite with corporate sponsors. It's part of why John's going down there. Marc Rebellion certainly isn't paying for John to go day drink with a bunch of CEOs for the next 3 days. I can tell you that, folks. I'm a better steward of capital. But listen, I know that he's 11 years, right, without actually seeing if that green jacket still fits without some tapering of the sleeve, or like me, somewhere around the waist. But I gotta like Rory McIlroy's chances. I know Scotty is in the number one position, at least as it relates to where the odds makers in Vegas, and they're pretty good at getting this stuff right, even when it comes to golf, which has so many variables. But I'm going to tell you, I'm going with Rory McIlroy to take the Masters this year. We'll see if that plays out. And Pete, with that, I think we got to go watch the red on the screen again. But before we do, folks, we are, Pete, myself, and a couple of our other absolutely fantastic market masters are going to be doing a 4 p.m. live webinar, absolutely free. It is the Portfolio Protection Plan. Boy, oh boy, if there's ever a time to cover that side of what we do at Market Rebellion, Pete, it's on a day like this. So producer Jared, if you would pop up a tile, a QR code, a link, QR, all right, beautiful. Folks, smash that link. It's going to be an hour of dropping knowledge on how to deal with this kind of vol, how to protect your portfolio. That's why we call it the Triple P, the Portfolio Protection Plan. That's 4 o'clock Eastern time. And Pete, tomorrow is Friday.
Yeah.
Mercifully, we do not do the Rebel's Edge. Many of you that are subscribers will be tuning in for our weekly cocktail hour. And man, that's been an interesting experience for the past couple of weeks. Tomorrow, I promise, will be no different. And until then, for you Rebel's Edge devotees, have a wonderful weekend. Stay calm, stay the course, trade smarter, get some rest, and we will see you again on Monday, 1 p.m. Eastern time, for another episode of The Rebel's Edge.